Very interesting. I was looking at Gilead, which is like a hypey healthcare stock, but this is the healthcare ETF. It's the XLV, one of the big ones. And this looks more like something that we can work with here. This is Brian Lewis with MMT Investing, and things just changed. So the S&P did something like this, and healthcare actually looks a lot like gold. The XLV looks a lot like the GLD, which is very interesting. But gold came up and up a little bit higher than healthcare on the bounces, but healthcare is not drawing down as far, and it is bouncing way higher than the S&P. So this is good for longs, which is not good for this week because I'm looking at this move right now starting on Monday. But when we get down and find another bottom wherever that is, and we reverse out the what's it, XLV? Yeah, the XLV is looks like a really good long. So I was looking at longs for the next bounce down here, and I think XLV is a good option. And I don't know if you got in there and started trying to grab individual funds, you may be able to get, I don't know, it gets really messy. The individual medical stocks are really tricky. But in general, like during a market crash, over the course of a crash, like when in a bear market, or I'm sorry, in a bull market, you usually get a general uptrend for medical. But now that we're in a bear market, I think the general trend here looks like slightly down over the course of the whole crash. And that's not good for a long buy and hold over the course of the crash. But it is just bouncing high when the stock market goes up. So it's really good here. So on this bounce, I think this is a really good thing to consider is the XLV because it's all the medical stocks. It's a stable fund of all of the stocks, and you don't have to go hunting around for individual hypey stocks that are going to be crazy volatile. You should just get a pretty smooth big bounce off the next bottom. But then again, smash that like button right now, please, to help me out with the YouTube algorithm. But right now, I'm looking at tech shorts are my favorite shorts right here, especially like Visa and PayPal right now because people think those are way better than they're going to behave in the next down move. Um, but I also like Dell a lot and as a short. And oil, BP, a lot of oil stocks have already turned. A lot of the oil stocks came and kind of flattened out and started to turn down early. So I don't know if now is a great time to get into the oil shorts. I actually just sold oil shorts and went back up and got PayPal on Friday. Um, yeah, so anyways, XLV looks like a decent long, but only on the ups. You have to swing trade on the ups for XLV, and this is not trading advice. Go look this stuff up for yourself, and I don't think I'm gonna go digging around inside this ETF and trying to find individual medical companies because my main strategy is just gold on the ups, and this is a decent complement to that strategy. So yeah, gold and maybe corporate bonds and XLV are a good balanced upward portfolio for this kind of swing trading movement. Um, that's it, and I am scared of Gilead. That stock looks crazy. But if I was gonna do Gilead, I would only probably do that on the up as well. I don't like going long anything, not even gold, nothing. The only long that makes sense right here on the way down is cash, which is flat, and the DXY, which is going up slightly, and like treasuries and stuff like that are flat. Um, Dollars. Dollars are the only long that's good during a down move in these market crash conditions. And the ups are medical and gold and maybe corporate bonds. I don't know. I'll try to dig up a couple other ideas for up moves. But happy trading.